When we think of the US dollar, we usually picture cash in our wallets or numbers in our bank accounts. But the dollar's reach goes far beyond our borders. Its influence is truly global, touching nearly every corner of the world in ways we might not always notice. The dollar is the world's most important currency, shaping prices and economies everywhere. Whether you're traveling abroad, shopping for imported products, or investing in international markets, the strength of the dollar quietly shapes your financial life. Even if you never leave your hometown, the price you pay for everyday goods, like electronics, coffee, or gasoline, can be influenced by the dollar's value. It acts as a global measuring stick. Oil, gold, and countless goods are priced in dollars worldwide. When the dollar is strong, Americans get more for their money abroad, making travel and imports cheaper. But when it's weak, our purchasing power shrinks, and things can get more expensive, both at home and overseas. For people and businesses in other countries, changes in the dollar's value can mean big swings in costs and profits too. The dollar's status as the primary reserve currency means central banks around the world hold it for stability and security. This global trust gives the US a unique financial position, allowing us to borrow more easily and at lower costs. It also means that the health of our economy isn't just a national issue. It's a global concern, watched closely by governments and investors everywhere. News about the dollar rising or falling isn't just financial jargon. It can impact jobs, company profits, and your investments. A strong dollar can help some businesses and hurt others, while a weaker dollar can boost exports but raise costs for imports. Understanding what moves the dollar helps you make smarter financial decisions, whether you're saving for retirement, planning a trip, or running a business. The dollar story is about global shifts that eventually affect your daily life. By grasping its movements, you can better plan for your financial future, protect your savings, and make informed choices about spending and investing. So, let's explore why the dollar matters so much, and what its recent moves could mean for you, your family, and your future. Over the past 4 months, the US dollar has steadily lost ground against other major currencies. The dollar index, which tracks its strength, has stayed below 100 and even hit a 4-year low in January. Why? Expectations of Federal Reserve interest rate cuts made US assets less attractive to foreign investors. Meanwhile, the euro surged as Europe's economy showed signs of recovery, drawing money away from the dollar. Political uncertainty and hints from the administration favoring a weaker dollar added to the pressure. Since Liberation Day, the dollar has dropped 6.7%, especially against currencies like the Australian dollar. This decline affects international businesses, travelers, and investors, setting the stage for debate. Is the dollar down for good, or is a rebound coming? Let's look at the case for a comeback. As pessimism peaked, some experts began spotting signs of a dollar turnaround. The euro's rally has paused, and expectations for aggressive Fed rate cuts are fading. If the US economy stays strong, the Fed may hold rates steady, making dollars more attractive to investors. Much of the bad news is already priced in, so there's less room for further decline. Jane Foley of Rebound notes that when sentiment is at its lowest, surprises can spark a reversal. Some analysts, like Dan Tobon at Citi, are now bullish, predicting the dollar will strengthen through the year. They're betting on a resilient US economy and a more stable political climate to drive a comeback. Could the dollar's slump be ending? The bulls think so. The strongest argument for a dollar rebound is the US economy's renewed momentum. After a period of uncertainty, the American economy is showing signs of robust recovery, with growth rates outpacing many other developed nations. When the economy grows and creates jobs, it attracts global investors who buy US stocks and bonds, driving up demand for dollars. This influx of foreign capital not only boosts financial markets, but also strengthens the dollar's position as the world's reserve currency. Recent data shows rising business confidence and investment, fueling a cycle of growth. New construction projects, expanding businesses, and higher consumer spending all point to a vibrant economic landscape. Foreign investors have kept faith in U.S. assets, even during the dollar's dip. Their continued interest highlights the trust in America's long-term stability and its ability to weather global shocks. As America's outlook brightens, more capital is expected to flow in, supporting the dollar. This steady stream of investment helps fuel further innovation and job creation across the country. A currency often reflects its country's economic health, just as a company's stock rises with strong earnings. When investors see solid fundamentals, they're more likely to bet on the dollar's continued strength. The bulls believe the U.S. economy's resilience will be hard for global investors to ignore. They argue that America's adaptability and innovative spirit set it apart from other economies. As positive news continues, the dollar could regain strength. Each new report of growth or job creation adds to the optimism surrounding the currency. Ultimately, a strong economy is the foundation of a strong currency. Factories humming, ports bustling, and banks thriving all signal a nation on the rise. The recent uptick in optimism is a key reason some see a dollar comeback ahead. Positive sentiment can be a powerful force in financial markets, driving further gains. Investors are watching for signs that U.S. growth will outpace the rest of the world. If America continues to lead, the dollar could become even more attractive to global capital. If that happens, expect the dollar to benefit. The world's eyes are on the U.S., waiting to see if this momentum can be sustained. The story isn't over yet. As the U.S. economy continues to evolve, so too will the fate of the dollar on the global stage. Politics and policy shifts in Washington are also shaping the dollar's outlook. A move toward more predictable policies, especially ahead of midterm elections, is calming investor nerves. The nomination of Kevin Warsh to lead the Federal Reserve reassures markets. He's seen as a steady, independent leader. The Fed's independence is crucial for global trust in the dollar. With a respected leader and less political drama, confidence in the dollar is rising. Stability in government and central banking is a powerful support for the currency. Not everyone is convinced the dollar will rally. Many experts, including those at J.P. Morgan and BofA, warn that the forces dragging the dollar down remain strong. The administration's preference for a weaker dollar to boost exports could keep pressure on the currency. Foreign investors are now hedging their U.S. assets, selling dollars and adding to the downward trend. Even with a steady Fed, concerns about its independence linger. If political pressure mounts, the dollar's reliability could be questioned. Bears argue that structural forces and policy preferences will limit any rebound. They see the dollar grinding lower as these headwinds persist. The debate is far from settled. The derivatives market offers clues about the dollar's future. In January, traders were betting heavily against the dollar and on a stronger euro. But after the Fed nomination, much of that hedging has eased. Now, more traders are betting the dollar will stay stable, not collapse. Strategies like the butterfly option suggest expectations of less volatility ahead. The market is shifting from panic to cautious observation. This change often precedes a turn in the actual currency value. The narrative is changing. Traders are no longer convinced the dollar's decline is inevitable. Dollar moves have real effects on your wallet. Whether you're shopping for groceries, planning a vacation, or investing for the future, the value of the US dollar can quietly shape your daily life in ways you might not expect. A stronger dollar means cheaper travel and imports. Your money goes further abroad, and foreign goods cost less at home. You might notice lower prices on imported electronics, clothes, or even your favorite foods from overseas. Planning a trip? Your dollars will buy more in other countries, making vacations more affordable. On the flip side, a weaker dollar makes overseas trips pricier, but helps U.S. exporters by making their goods more competitive. American products become more attractive to buyers abroad, which can boost jobs and profits for U.S. companies. It can also attract more foreign tourists to the U.S., boosting local businesses. When the dollar is weak, Visitors find their money goes further here, filling hotels, restaurants, and shops. Currency swings impact your investments too. The value of the dollar can affect everything from your retirement account to the price of imported goods in your portfolio. If you own international stocks, a weak dollar boosts your returns. A strong dollar can reduce them. Exchange rates can turn a modest gain into a big win, or shrink your profits. Diversifying between U.S. and international assets helps balance these risks. By spreading your investments, you can cushion the impact of currency swings and keep your financial goals on track. When the dollar is strong, U.S. stocks may shine. When it's weak, your foreign holdings can benefit. This balance can help smooth out the ups and downs in your portfolio. Understanding these dynamics helps you make smarter choices. Being aware of how currency shifts affect your spending, saving, and investing puts you in control. Currency movements aren't just numbers, they shape your financial future. From the cost of living to your investment returns, the dollar's value is woven into your everyday decisions. Stay aware, and you can use these shifts to your advantage. With a little knowledge, you can make choices that protect and grow your money, no matter which way the dollar moves. Let's see how to navigate the dollar's ups and downs, and make the most of every opportunity that comes your way. So, what should you do as the dollar story unfolds? Don't panic or overhaul your financial plan based on short-term headlines. Instead, build a resilient strategy that can weather currency swings. If you're planning a big purchase or trip, watch exchange rates and lock in costs when the dollar is strong. For investors, global diversification is key. Don't bet everything on the US or the dollar. International holdings can shine when the dollar is weak, while US assets benefit from dollar strength. Stay informed, review your plan regularly, and focus on your long-term goals. Understanding currency trends builds confidence and helps you avoid costly mistakes. Stick to timeless principles, and you'll navigate the dollar's ups and downs with ease. Keep learning, and you'll stay in control of your financial future.